Hey everyone, welcome back to Corporate Decoder. Today we're diving into a juicy 10K report, but be warned, it's not exactly a page turner. We're talking accounting complexities and legal jargon, enough to make anyone's eyes glaze over. Let's see if we can extract some sense from Braemar Hotels and Resorts' latest SEC filing. This report offers a peek into the financial health of Braemar, a company that invests in fancy hotels. Think Four Seasons and Ritz-Carltons, not your average roadside motel. So how did they do last year? Well, they're dealing with some significant financial challenges as hinted throughout this filing. The report kicks off with the usual formalities: the company's name, the form type 10K for annual reports, the date it covers, end of 2024, and their contact information. Fun fact, their commission file number is 001-35972, not that you'll need that for trivia night. Now for a word of caution. The filing includes a section on forward-looking statements. These are basically guesses about the future using words like may, will, expect, and believe. The report makes it clear these predictions are not guarantees, and a whole host of factors could make reality different from what's written here. Braemar is an externally advised company, meaning they rely on another company, Ashford LLC, to manage their day-to-day operations. They don't have employees of their own. Their strategy focuses on high-end hotels with plenty of opportunities for growth. Let's talk hotels. As of earlier this month, Braemar had interests in 15 properties. These aren't just any hotels, they're urban or resort locations aimed at customers willing to spend a premium. Time for some numbers. Let's jump to a table summarizing their hotel performance for the year. The occupancy was 67%, meaning 2/3 of their rooms were filled on average. The average daily rate, or ADR, was $465, RevPAR, or revenue per available room. A key metric was about 312 that, while the revenues are strong, the hotel net income was only $30 million for the whole year, which means that costs are quite high. I'd to see the highlights of individual hotels. The Four Seasons Resort Scottsdale only had 53.76% occupancy with a high ADR of $888, while the hotel net income was $522K. The Ritz-Carlton St. Thomas, on the other hand, had 9.3M net income, despite a lower occupancy, 6370 Tarmans, and very high ADR, 1071. The Capitol Hilton had a net loss of 165023M, despite having high occupancy of 78.64%. The Clancy, located in San Francisco, had a net loss of 16267M and occupancy of 66 challenges in San Francisco's market. Many of the sections talk about the operating history of specific hotels. To avoid getting too deep into it, they give selected financial information for the last 3 years. So for example, Sofitel Chicago generated a hotel net income of just 1.178M in 2024, which is just 3% of the revenue, while generating 37.5M. That means that there are almost 97% operating costs. These numbers raise concerns about the health of the hotel. They rely on their advisor, Ashford LLC, to keep things running smoothly. This includes working with the hotel managers, making sure expenses are in line, and finding ways to boost revenue. Most of Braemar's hotels are managed by big names like Marriott and Hilton under management agreements. These managers get a cut of the revenue-based management fee and potentially more if the hotel does well, incentive management fee. Some of their hotels operate under franchise agreements and pay fees for using brands such as Camp Beverly Hills. Braemar's debt strategy leans heavily on variable rate loans. While this can be cheaper when rates are low, it becomes a risk if rates rise. They aim for a leverage of 35% net debt to gross assets. Here's where the report outlines the agreement with their advisor, Ashford LLC. They're responsible for pretty much everything, from finding deals to managing the hotels. This agreement runs for a long term, but Braemar can terminate it under certain conditions, like a felony conviction of the advisor. Importantly, Ashford LLC gets paid a base fee that can't go below a certain minimum. It also mentions an incentive fee and reimbursements for expenses. In this section, it absolves Ashford LLC of responsibility, with few exceptions such as misconduct and bad faith. Terms of the management agreements with Marriott, Hilton, Four Seasons, Hyatt, or Accor allow 11 of the hotels to operate under brand names. The manager controls the IP and trademarks. Now comes the reality check. This section outlines the risks that could throw Braemar off course. A big one, their ability to raise enough cash. Rising interest rates and inflation are major worry. It affects everything from debt payments to hotel expenses. There's also the risk of conflicts of interest given their relationship with Ashford Trust and Ashford Inc. This could influence management decisions. General economic conditions can cause volatility for the hotels. Management discusses the performance. Let's take a look into the results. Comparing 2024 to 2023, the filing says rooms revenue decreased by $12.5 million, primarily due to the sale of one hotel in July 2024. Selected financial information Cartha, certain financial information regarding Capitol Hilton, the Clancy and Sofitel Chicago are summarized. Management expects the short-term liquidity requirements can be reached through cash flows. Their CEO and CFO believe their disclosure controls and procedures are effective. This section also includes the management report on internal controls and the independent auditor's opinion. The company provides a list of all the financial statement schedules and exhibits included in the filing. The report concludes with signatures from key people. In summary, this report paints a picture of a company navigating a challenging landscape. The company is in debt and is trying to improve its finances. Braemar faces significant risks, notably its high debt load in an environment of rising interest rates and inflation. These factors put pressure on their ability to maintain profitability and navigate economic uncertainty. Also, conflicts of interest continue to present challenges that could influence management's decisions. But despite these challenges, the company's focus on luxury hotels provides opportunities if the overall economy cooperates and consumer spending remains stable. However, it is important to note that the report has heavy doses of warnings throughout it. Braemar needs to carefully manage its debt and keep a close eye on market trends in order to succeed. That's all for today's episode of Corporate Decoder. Let me know what you think in the comments and remember to like and subscribe for more deep dives into the world of financial filings.